Hello. Test test 1 2 3 4. If anyone's out there, can you let me know how the audio's coming in as far as the mic? Polynesian Pip, aloha. Where are you from? RR sounds good. Thanks for being here. Steven, Mabe, all good. Thank you. Pat D coming in over. Okay, great. Thanks, guys. Appreciate it. Polynesian Pip, Big Island. Okay, nice place. I got some good friends over there. I grew up in Pearl City over on Oahu, but yeah, Big Island, good place. Nice place. Tim McKay, how you doing? Carlos Santos, audio good in Bronx, all the way from Bronx. Thank you for being here, Carlos. Sean McDonald, how you doing? Sean, sound is good from Ohio. Good. Okay, Pat, got it. More better now. Okay. Logan, everyone, thank you for once again being here on our live stream. Thank you for joining Silver Bullion Television, SBTV. I'm your host, Patrick Vera. I hope all of you had a great Thanksgiving weekend. Had enough turkey and stuffing and pie, and man, I miss those things. But anyway, glad you all could be here. Hope everything's going well. Once again, a lot of things going on in the world. Pudenda Johnson, how you doing? Richard DeBono, have an important question for me. I hope I can give you a good answer for that question. But anyway, again, guys, thanks for being here. And as always, if you are new to this channel or you have not already done so, please do subscribe. Click on the bell to be notified on updates and give us a thumbs up if you like what we do. As always, we really do appreciate your support. And don't forget, you can always find us on social media. Our website is www.silverbullion.com.sg. On Facebook, you can find us at Silver Bullion SG. Again, we are in Singapore. Twitter, you can find us at Silver Bullion PL Private Limited. If you want just the audio versions, bit.ly, bit.ly/SBTV iTunes, SBTV Spotify, and join our Telegram group where we have a group called Crisis Tracker, and we post articles that we find every now and then from the web, and we have a discussion about it. So I do hope that you guys can join the group or find us in other places on social media. Robert Sapp, not related to Warren Sapp. How you doing? Yeah, I remember that from the other week, right? Miami. How you doing, buddy? Anissa Sharif, all good in Charlotte, North Carolina. Hello, all. How you doing, Anissa? I got one bit of news from South Carolina, your neighbor. We'll go over that in a bit. Let's see. Pad, do you think we continue down until options expiration for December? Um, Jeez, that's a great question. I, they seemed open interest seems to be going on quite a bit again. Let's see. It, I really can't answer that one either way. But for me, like I say, I personally don't look at silver as a 100% investment only type of a deal. I look at it as an insurance. So personally, my take on it is just accumulate. Accumulate what you can when you can. I wish I had a better answer for you. Let's see. The dude MJ, first time I see you here. Welcome aboard. Greetings from UK. Thank you. Appreciate it. Pink Mangoes, how you doing out there? Nice name. I like that name. Cute emoticon. Okay. Let's see. So, well, let's Sorry, just got a lot of stuff here. So let's just first take a look at the gold and silver prices as always. So we'll head over to our website silverbullion.com.sg. I'll go ahead and make sure this is in US dollars, and we're seeing silver still right about at that $17 per ounce level. Gold 1461, it's a struggle for it to maintain that 1500 level, and we're gonna have to see how this thing plays out. But silver seems to be right around that 17 level. It'll go down, it'll bounce right back, and I think silver's doing pretty good. Nickel a bit down still. I was hoping it would get back to that $15,000 per ton level at least. It's sometime in the beginning of December, but we'll see. Still the beginning of December, so let's see how nickel is going to go. One other thing that I want you guys to check out on our website is if you go to storage and then you go to download investor kit. This is a free thing. If you notice, I'm not even signing up for anything. If you notice, I'm not even logged in. Didn't sign up, didn't log in. You can go to storage, download investor kit. And what you're going to see here is this little publication that we put together, Silver Bullion Investor Kit, and then we have a few different topics on there. Things such as why buy gold and silver, buying taxes and bullion in Singapore, and this is kind of something people should know because different coins may have they may be tax exempt, and different coins or other coins may not be tax exempt. So it's always good to know which coins are tax exempt. Why should you buy silver? Safely storing wealth outside the banking system, and probably one that a lot of people are interested in borrowing or lending with secured P2P loans, which is on page 17. So if I just quickly type in page 17 there, it'll pop up, and then it'll explain about borrowing or lending with secured P2P loans. And again, this is because if a lot of times you have gold and silver, and if you store it or it's just sitting there, it's basically just sitting there. But with our P2P program, what you can do is actually borrow against what you have. You can borrow against your silver and gold holdings, and you can buy more silver and gold if that's what you want to do. But the thing is, throughout the whole process, you are still the owner of it. It's not a leasing program. This is a legit, you own the physical silver and gold, and you are just borrowing against the physical silver and gold. And you're borrowing against peers who are lenders. And these lenders, basically, they just need an account with us. And if they have an account with us, they can go ahead and put money in their account. And what they can do is then go ahead and make lending offers, as we see here when we click market. Then we'll see that all these people, they're lending money or loaning money. So this guy wants to borrow 16,500 Sing dollars, and these guys are offering these amounts. This person wants to borrow at 2%. These people are willing to loan anywhere from 2.5 to 3% onward. If you look at USD, which is probably more popular, let's see what's out there. USD. So there's one person, he wants to borrow $27,000 for 12 months, 1 year, at 3.5% interest per annum. And we have guys who are trying to loan money at 4.75 upwards to 7%. 7% might be a little bit on the high side, but this is where if you have, you know, you probably would get a better return than if you just left your money sitting in your savings account, because we got guys who are willing to pay 3.5%. We got guys who are willing to pay, example, 4%. And we got some people who really would like to borrow some good amounts, 180,000 here, 100,000 there. And on the lending side, no one has come up with that yet, which means it's a great opportunity for some of you who have done well. You could simply open up an account, make a lending offer, and there you go. You could probably lock in one of these guys with a loan. So that peer-to-peer program, it's a big thing. I do hope you folks download that investor kit. It's free, absolutely free, and as I showed you, you don't even need to sign up. It's yours for free. Okay, so let's take a look at some of the questions there. Thomas Tubes, how you doing? Let's see. Robin Stable, do you know if anybody is going to have Cyber Monday deals on? No, 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 not sure. I don't think I know we aren't anyway. Let's see. Pad. I agree. I'm seeing a bounce in March. I hope so. I hope there is a bounce, but I gotta admit, if there is a bounce, sometimes I do like to see it come back down also, so I can continue buying some silver and some gold at a good price. So it's a bit of a dilemma. We want to see the price go up, and then again, sometimes we we want to see it come back down. So when you're in silver and gold, sometimes you really are attuned to a lot of things, and a lot of little things. Uh, they play a big role as far as your your ideals as far as you should want to buy or sell. It's pretty interesting. Richard De Bono, boy, thank you, Richard. Appreciate that. Let's see. Have you looked into Libra? Centralized crypto said to be. Libra. The problem with Libra is you got a lot of legislation that's going against it. We a lot of us had an opinion when it first came out. Our opinion was good luck trying to get it past legislation, and sure enough, legislation, governments, they put the brakes on it. So, with Libra, I think we're going to have to wait and see. Especially when you hear countries like China about ready to come out with their own crypto. If they do, where does that put Libra? But admittedly, this is something we're going to have to take a little bit more of a look at. You probably might know more than me about Libra right now, because once governments or once governments decided to legislate on Libra, I think our antennas kind of went down because it became sort of a wait and see thing. And while we're waiting and seeing, then we saw other countries start to come in with their own crypto, or ready, they say, to bring out their own crypto. So Libra, can't tell you, but I think it's more of a payment system actually more than anything else, right? But we'll see what happens with that. Let's see. Good morning, Frank. Morning. How you doing? RR. Unless he's blessed by the Fed, he's dead on arrival. Could be. Pablo Pina. I think your business idea is brilliant. Comparison to Airbnb buying producing income from an asset. What do you say to individuals who already store gold and silver and want to loan? I would say do it. Especially if you think gold and silver is going to go up, it may be a good time to go ahead and borrow against it. And then what happens is, when you take out that loan, your loan is valued against the value of your gold and silver at that time. So let's say you borrow a loan, or you take out a loan for a year. In a year's time, when your loan becomes due, let's say silver price went up, you can go ahead and roll over that parcel, that particular silver and gold items that you use to create the loan. You can roll it over, but now you have a higher valuation, right? So you can go ahead and roll that parcel over, go into a new loan contract if you want, peer to peer loan contract, use that second loan to pay off the first loan, and you probably have a higher revaluation the second time around if silver did go up, which means you actually got the money for less. You got your loan for less than what you originally thought. So it's a good idea. I would do it. But it's an okay thing to do. I mean, a lot of people do it, and a lot of people do roll over, and we see a lot of people buying more silver, or else they'll buy other things. Redeploy their assets and go ahead and buy other things. Maybe it's real estate, or some guys want to go into crypto. So whatever it is, guys, they go ahead and they'll use that money from that P2P. It's a good thing. And again, lenders, if you got money just sitting there, and it's not really doing anything for you, you can get 3, 4, maybe 5%, whatever it is, just by simply creating a lending offer in the peer-to-peer program. So it is a good thing. It does work, and we've been doing it for a few years, and it's so far, everything works well. The system is set where, you know with all the moving parts, everything is accounted for, and there's not much that really can go wrong with it. So it's a good system. Okay, so let me move on a bit. um One piece of news I think all of you probably heard about is this $4,000 gold thing going on. And some mystery buyer makes huge options bet on gold hitting 4,000. um So this is by, hang on, let me see. An unknown person or hedge fund bought 5,000 options on gold, hitting $4,000 an ounce by June of 2021. Um, the gold options market saw 1.75 million in block trades, betting the precious metal could almost triple in more than a year, surpassing the record. Around noon in New York, Wednesday, last week Wednesday, 5,000 lots of gold option giving, excuse me, 5,000 lots of a gold option giving the holder the right to buy the precious metal at $4,000 an ounce in June 2021 changed hands. The bets were sold at $3.50 an ounce. So this guy is betting that gold is going to be above, somewhere around there, or above that 4,000. So it's like an 18-month term life insurance. What will the world look like if gold is at 4,000? Tai Wong, the head of metals derivatives trading at BMO Capital Markets, said in an email, they are hoping for a quick, violent move, he said, referring to people who bought the call option. For the call buyer, it's not a matter of gold hitting 4,000, but rather gold hitting 4,000 by June. Of course, one would not have to hold the options all the way through. If gold suddenly spiked by 1,000 right away, perhaps the entity could sell the options for $15 or more, at least tripling bet. Otherwise, these options will quickly decay. So he doesn't even need that 4,000. Um, so this was quite a story of how someone went and they're making bets that gold is going to rise, and it's going to rise pretty significantly and within a couple of years. So 2021, well, it's almost 2020, so perhaps a year and a half or so. We'll see how that goes. Um, let's see. Um, Richard De Bono, Libra is set to be unleashed early 2020. Check out the 28 founding members, Concordia. They won't be stopped. Well, I again, I don't believe governments are investing in all these projects to create their own cryptocurrencies, Fed coins, one coin, whatever it's going to be, just to let another entity take over. So I'll read it, but straight away I'd have to disagree a bit. But I'll go ahead and find out more about Libra. But again, I just find it difficult to see banks or governments giving up that power, because as that one Rothschild said, he doesn't care about the government. He just cares about creating the money. So I don't think everybody's going to want to be the one to create that money, but somebody's going to have the final say. And I think the people who have the final say are the people who have armies and navies and things that can force that final say upon you. Until I see a Facebook army, um, I'm a little bit in denial on that. So anyway, let's see what happens. Maybe you could be right. You could be right. I'm open to it. Let's see. Another bit of news we had. I saw someone earlier from North Carolina. There was a little bit of news that came in from South Carolina, where South Carolina Legal Tender Act would treat gold and silver as money. All right, there you go. Columbia, South Carolina, a bill pre filed in the South Carolina House would make gold and silver coins legal tender in the state. Passage of this bill would take a step toward creating currency competition in South Carolina and undermine the Federal Reserve's monopoly on money. Representative Stuart Jones filed House Bill 4678 on November 20. Under the proposed law, gold and silver coins minted, foreign or domestic, shall be legal tender in the state of South Carolina under the laws of this state. No person or other entity may compel another person or other entity to tender or accept gold or silver coin unless agreed upon by the parties. Practically speaking, this would allow South Carolina residents to use gold or silver coins to pay taxes. Now, you don't want to give it back to the government, right? I think you want to hold it to, let's see, residents to use gold or silver coins to pay taxes and other debts owed to the state. In effect, it would put gold and silver on the same footing as Federal Reserve notes. The phrase, unless agreed upon by the parties, has important legal ramifications. This wording reaffirms the court's abilities to reaffirms the court's ability and constitutional responsibility according to Article 1, Section 10 to require specific performance when enforcing such contracts if voluntary parties agree to be paid or to pay in gold and silver coin. South Carolina courts could not substitute any other thing, example Federal Reserve notes, as payment. So South Carolina taking a step forward. I think they're joining other states such as I believe Utah, I think Wyoming as well. I know there's a few states now. Oh, there we go. Wyoming and Oklahoma. So we'll see what happens with that as we move forward. Okay, let's see. Richard De Bono, you need to see who they are, the ultimate power bloodlines from Byzantine Empire. Well, I mean, Richard, I don't doubt it, but like I say, whoever controls the money, they control a heck of a lot of things. And you can, we all can create whatever we want to create, and we can tell people it's going to be money, but unless we got some power to back it up, we'll have to see. Maybe these guys have the power. Maybe they're all in it all together. Maybe they are leaders of countries, or maybe they got leaders of countries to agree on something. But we'll wait and see. Like I say, I'm not ruling it out, but for now I think there's a lot more that has to be proven besides something, besides a narrative that's trying to shape people's minds. So I for me personally, I need to see more. But like I say, who knows, you could be right, Libra could be it, but again, I for me personally, I need to see more. Okay, another thing that article I came across was something from the Dallas Fed, and we've been talking about this for a while, this whole CLO and corporate debt type of a thing. And so we have President Rob Kaplan. He comes out with this article or essay where he says corporate debt as a potential amplifier in a slowdown. So he goes on to say that as a central bank policymaker, I closely monitor various types of excesses and imbalances that may be developing in the economy. One of the areas I monitor is the level of growth and indebtedness in the household, government, and corporate sectors. In previous essays, I've commented on the positive impacts of the deleveraging of the household sector since the Great Recession, and I have raised a cautionary flag regarding the growth of U.S. government debt, including a substantial increase in the present value of unfunded entitlements. So I'll skip down a bit here. Okay, trends in non financial corporate debt. Non financial corporate debt consists primarily of bonds and loans. I think we're familiar with this, right? Commercial paper outstanding is less than 5% of the total. Non financial corporate bonds outstanding in the US grew from approximately 2.2 trillion in 2008, 5.7 trillion, basically more than doubled last year. The bulk of this growth occurred in the investment grade sector. The amount of outstanding U.S. investment grade non financial corporate bonds grew from 1.5 trillion to 4.5 trillion at year end 2018. So these things are growing and growing astronomically here. Now, within the investment grade sector, there's a notable increase in the amount of triple B bonds, the lowest level of investment grade debt outstanding, growing from approximately zero point 0.8 trillion in 2008 to 2.7 trillion. So again, these things are basically tripling. That they are growing exponentially. And in addition, the amount of high yield, here's that word again, less than investment grade non-financial corporate bonds outstanding grew from approximately zero point 0.7 trillion to 1.1 trillion by year end. So they're moving into these lower investment grades. Substantial growth in triple B and lower rated bonds is indicative of a weakening in corporate credit quality in the US. Okay, so let me go down a bit here. Basically, they're talking about these CLOs again. So CLOs are investment vehicles that buy pools of floating rate leveraged loans from banks. The CLO package loans are loans, they go into tranches of debt with credit ratings ranging from AAA to double B, and with one non-rated tranche of equity, as illustrated in these charts. These tranches are scrutinized and then sold primarily to institutional investors. The ability of a CLO to turn lower credit quality loans into mostly investment grade rated bonds via securitization hinges on three key factors: over collateralization, tranching of securities based on levels of subordination, and portfolio diversification. This sounds awfully lot like the CDOs, right? The collateralized debt obligations. And we've gone over this last week. So I'll go down a bit, and where he looks at these implications of rising levels of lower than basically the investment grade corporate debt that's not so good, or not the best anyway. So as a central banker, I'm carefully tracking the growth in triple B and less than investment grade debt. In the event of a downturn, highly indebted companies may be more vulnerable to seeing their credit quality deteriorate, which would negatively impact their capital spending on hiring plans. If this deterioration were sufficiently widespread, credit spreads would likely widen in order to compensate lenders, bondholders for greater risk. This type of widening would likely be indicative for an overall tightening in financial conditions that could in turn lead to a more significant slowing in the economy. We'll just go down to his conclusion where he says, it's where it gets a little bit interesting. He'll continue to closely monitor, as all Fed heads say, they'll continue to closely monitor the level, growth, and credit quality of corporate debt. Vigilance is warranted as these issues have the potential to impact corporate investment and spending plans. In the event of an economic downturn, these issues could also contribute to a deterioration in financial conditions, which could in turn amplify the severity of a growth slowdown in the U.S. economy. I am also sensitive to these corporate debt developments in light of the historically high levels of U.S. government debt and the forward estimates for the path of government debt to GDP. An elevated level of corporate debt, along with a high level of U.S. government debt, is likely to mean that the U.S. economy is much more interest rate sensitive than it has been historically. So, again, they're kind of softly letting you know that these CLOs and other things can be an issue. But again, if you've been following us, we've been following that. So you probably had a good have a good hold on what's going on with these things such as CLOs. Let's see. Ride the curve, Patrick. Anyway, you could push out the show announcement to us a bit earlier. Yeah, sure. We can do that. We can do that. RR, nothing new under the sun. Absolutely. Fritz Bender, what's the latest on Hong Kong? Anything? I haven't been following much on Hong Kong lately, but I do know that they had some type of a vote where they kind of sort of cleaned house. They want a little bit more democratic freedom there, from what I understand, if I understood correctly. Joel Johnson, investment grade. Yeah, crazy stuff, right? Let's see. Let's see what else is there. Sorry, let me put this up for you guys. They became parcels of B grade, parcels stressed in a ribbon, made all pretty, and passed on as something that appears a little more attractive than they actually are. Lipstick on a pig, right? We've heard that phrase also. Let's see. Leave me some triple B bond nitroglycerin. Okay, pad CLOs are a house of cards just waiting for a slight breeze to blow them down. Yeah, it's again, a lot of people, a lot of economists try to brush it off or don't really follow it, and it could be a problem. But their defense is basically they say that CLOs were around back in 2007, 2008, and they did okay. The CDOs on the other hand didn't do okay, but CLOs did okay, so they felt okay. We can continue to go into these things, but I kind of look at it as what happened is corporations saw that banks were too big to fail, and I guess in their minds, some of them feel, hey, we're too big to fail also. I mean, can you imagine U.S. without a Boeing, as I've said before? U.S. without a Boeing, U.S. without a Ford, U.S. without GM. These types of companies. Can you imagine that? It's pretty difficult to do. So I'm pretty sure these companies say, hey, we're too big to fail. Let's, there's not much yield out there, so let's go ahead and we can go into these CLOs. And I think it was uh, hate to say that word, inevitable, but you kind of knew that if the banks did it, why not the bigger corporations that see themselves as too big to fail? So that's just my opinion how I'm looking at this thing. Let's see. Thomas Tubes, other than gold, I'm in Beanie Babies and Cabbage Patch Dolls. Okay, we'll see how that goes and when it comes time to barter, right? Let me know how those Cabbage Patch Dolls do. They were pretty they were all the rage back in what, the 80s, I think. They it was pretty wild back then with those Cabbage Patch Dolls. Anyway, let's see. Ride the curve. What's the opposite of investment grade debt? Physical precious metals. Yeah, it's a good one. That's good. Okay. Hey, I can see my partner Vincent is out there answering some of your questions. Vincent, appreciate it. Uh, Vincent's a little bit sick today, but he's hammering it out. He's still here on the job. So Vincent, thank you, buddy. Appreciate it. Pensions are a huge issue. Fritz Bender, absolutely. We've also gone over those pension problems, and the conclusion: the pension is a promise, and it's a promise from who? Politicians. Since when do we believe promises from politicians, right? So be careful. Be careful with those pensions. Map of Tassie. First time I've seen you here. Welcome aboard. Hope I got your name right. Lipstick, mascara, and perfume absolutely is the norm now. Absolutely, they are trying to cover things up as much as they can, and it leaves us to try to make sense of these things like national debt. And so we got this article here from the St. Louis Fed. Okay, making sense of national debt. Maybe they're trying to make sense of it also, right? So they have a quote from Herbert Hoover. Blessed are the young, for they shall inherit the national debt. Okay, so we live in a world of scarcity, which means that our wants exceed the resources required to fulfill them. For many of us, a household budget constrains how many goods and services we can buy. But what if we want to consume more goods and services than our budget allows? We can borrow against the future income to fulfill our wants now. This type of spending, when your spending exceeds your income, is called deficit spending or credit card for most of us. The downside of borrowing money, of course, is that you must repay it with interest, so you will have less money to buy goods and services in the future. So this author goes on to say how governments face the same dilemma. They too can run a deficit or borrow against future income to fulfill more of their citizens' wants now. For a variety of reasons, governments may borrow rather than fund spending with current taxes. Because if they raise taxes for projects, you and I won't vote for them, right? So what's their alternative? They're gonna print money. They're gonna get more money made up that goes into the system. Deficit spending can be used to invest in infrastructure, education, research and development, and other programs intended to boost future productivity. This would be good debt, right? Because this type of investment can increase productive capacity. It also can increase national income over time, and deficit spending can be used to create demand for goods and services during recessions. Okay, let me go on a bit. Who owns national debt? Well, a lot of it actually is the public. The public owns a lot of the national debt. Let me skim through this a little bit here for you. Um, okay, the life cycle theory of consumption and saving holds that households seek to smooth their consumption of goods and services over the life cycle by borrowing early in life for college and to buy a home. Then we save and pay down our debt through our working careers, and finally living on their savings during retirement. You don't see much of this anymore, but this was how the life cycle or the financing over life cycle was supposed to have been. And during that time, financial advisors often suggest that people try to be debt free before they retire. As such, people are often motivated in their prime working years to pay down their debts and then pay them off entirely before they quit working. Given this mindset, people often assume that government debt must be paid in full at some point, but there are important differences between government debt and household debt. While we tend or prefer to pay off our debts before we retire, governments, they endure indefinitely. In general, governments expect that their economies will continue to grow and that they will continue to collect tax revenue. If governments need to refinance past debts or cover new deficits, they can simply borrow. In effect, governments never need to pay off their debts entirely because governments will exist indefinitely. Again, this is coming from the St. Louis Fed, right? How nice of them to let us know that. So when we continue down a bit, he goes on to talk about hawks, doves, and owls. That was pretty interesting. But the Government Accounting Office or GAO suggests that U.S. government debt is currently on an unsustainable path. We got that here, right? Unsustainable path. This is our government. The federal debt is projected to grow at a faster rate than GDP for the foreseeable future. A significant portion of the growth in projected debt is to fund social programs such as Medicare, Social Security, using debt held by the public instead of total public debt. The debt to GDP ratio averaged 46% from 1946 to 2018, but reached 77% by the end of 2018. It's projected to be 100% within 20 years. A little bit of the risk here. Credit risk. Hang on here. Credit risk is to the lender that the borrower will not repay in loan. It is one component of the interest rate that borrowers pay. Like for all loans, interest rates on treasury securities reflect risk of default. The higher the risk of default, the higher the interest rate investors will expect. A country perceived as a higher credit risk must pay bondholders higher interest rates than a country perceived as a lower credit risk. So I'll just go to the conclusion here. The national debt is high by historical standards and rising. People often assume that governments must pay off their debts in the same way that we do. However, there are important differences. Governments do not retire, governments do not die. As long as their debt payments remain sustainable, governments can finance their debt indefinitely. And if a government prints money to solve its debt problem, history warns that hyperinflation and financial ruin will likely result. While debt in itself is not a bad thing, it can become dangerous if it becomes unsustainable. Well, you just told us that it was unsustainable, right? That's what you just wrote in your article. So come on now. I mean, don't let's not butter things over here. You just come out and say, the debt is unsustainable. We're gonna be heading into hyperinflation. That's what history tells us, right? That's why we're buying things like silver and gold. Incredible. Okay, let me take a look at a little bit more of your comments here. Let's see. Dueme, will USD officially collapse 2020? BRICS recent joint meet an indicator. Hard, hard to say. I mean, it's just hard to say. And I think more importantly, when this collapse or changeover, whatever it is, when it happens, is it going to be a peaceful changeover? That's probably the bigger question. We know it's going to happen. We don't know when, but will it be a peaceful changeover? I think that's important for all of us, right? Uh, let's see. What 21 trillion and growing is out of control? Who would have thought? Nah, none of us would have thought it would have gotten out of control, right? Everything's okay. Let's see. Anyone see the Bloomberg and Lagarde interview? Death and taxes are obsolete. Joel Johnson, yes, I saw it. I found it kind of concerning. I don't want to get too political here, so I'll just say my take on it without getting too much, as to who I like, who I don't like. But I did find it concerning that they're trying to save poor people by not allowing poor people to buy things like soda or things like that. Basically, they want to control your life, and they will control your life through money, money and taxes. That was my take on that interview. I'll just say it, for me, it was sickening. I found it pretty darn sickening to be honest with you guys. Let's see. Peter Budgen. Hope I got that right. Budgen, first time here from UK. Nice info, helpful to us newbies. Peter, welcome aboard. Glad you made it. Joel Johnson, very concerning. Absolutely, at the very least, very hugely concerning. I mean, this is where they want to go. This is where they want to take us, right? And again, this is why we need to be having things that can help us outside of the financial system that they want to lay upon us. We need to have that historic money, that silver and gold, because that it's basically always been money. They just, banks and whatnot, they just wanted to kind of create something else on the side, and they've kind of moved off it. But if you look at it, not really, because they still buy a lot of gold, as far as having and holding reserves. So, I mean, these are things we have to be awake to, but still, have some, be a little bit tempered. Don't need to go down too many rabbit holes and go down too many deep rabbit holes. But we do need to know what's going on, what policymakers, uh, especially the financial institution types, the IMF, BIS, those guys. We need to know what we're up to, because I've said this before. It's pretty troubling when you have the IMF, who basically tries to create policy for different countries throughout the world. And the thing is, none of us vote for anybody in the IMF. I haven't voted for anyone. I know you haven't voted for anyone that's in the IMF, which means they are not accountable to you or me. They're not accountable to anybody. They're going to do their own thing, and that's concerning because, like I said, they try to set policy, create policy, influence policy on nations, but yet nobody voted for them. So IMF, it's an institution that we all need to be a bit wary of. Um, but going forward, we are going to be cashless, somewhat. I'm pretty sure on that. And I just want to give you a quick take on what's going on in countries such as China, about where we are moving, and I think what we're going to see in the western part of the world also.
In China, people use mobile services owned by Alibaba and Tencent to do almost everything. They chat, shop, send money to each other, and even make purchases in physical stores. And the country is becoming cashless. So here's the scary thing for American finance executives. The banks never get a cut. In fact, many Chinese don't even have bank accounts. China is among the growing number of countries showing that payments can happen cheaply and easily without banks or credit cards. In contrast, US consumers still rely on banks for most of their purchases. Even mobile payments made through apps like Apple Pay, Uber, or Venmo are tied to users' cards or bank accounts. That all adds up to a feast of fees for many of the companies that handle and process payments. For a typical $100 credit card purchase in the US, $97.25 goes to the merchant, and the rest is split between issuing banks, payment processors, the merchant's bank, and card networks. Those small slices add up to billions of dollars for banks every year. If apps were to grab market share in the US at roughly the same rate as they have in China, banks would lose a projected $43 billion in revenue from one of their most profitable businesses. And that's not the end of it. Banks also generate revenue by dispensing cash and administering checking accounts. If payment apps were to replace paper money and offer alternatives to regular bank accounts, as they increasingly have in China, other sources of income could take a hit. Checking accounts alone generate $3 billion in bank fees in the US. Whether or not you have access to a bank, being able to make and receive payments through your phone is an obvious advantage, as Alipay and WeChat Pay have demonstrated in China.
Okay, pretty interesting stuff, right? I mean, what are we gonna do? Just have our accounts on apps, and then just go ahead and use apps to pay for things. We'll have to see, because then it becomes a matter of who controls the apps, and then it becomes a matter of the entities that control the apps, which governments are they tied into. So it's going to be pretty interesting to see. A little bit more of your comments before I get into the meat of the excuse me, the program. American Rebel 27 track record of IMF leadership is cause for pause. Yeah, it is. And one thing about IMF, I think that establishment is it's only geared to have European leaders, no U.S. leaders, no basically no U.S. leaders, but outside of U.S. Mostly European. I think it is I've read something somewhere saying it's basically meant to be that way. There was only I think one U.S. guy that took over, but it was only temporary while there was some type of changeover within the leadership of IMF. So again, something to keep an eye on. Let's see. Our central banks won't allow currency they don't control. Probably will start a war with China. Uh, I agree with that. Unless again, there's some type of arrangement that's already made. But you know, I think the bigger thing is not the bigger thing, but one thing we have to understand is the dollar is countries are de-dollarizing. We've also gone to this in quite a bit of detail. Countries are de-dollarizing. They're trying to get off the dollar, and they have their reasons why. And in some cases, yeah, you'd have to agree and understand, yes, why they would like to get off the dollar. Um, it is we are going to have some type of a new monetary system, and as we were talking about earlier or discussing, is it going to be Libra? I don't know, but my take on it is it's going to be some type of a gold back crypto, and it's going to have to be some type of a cryptocurrency, or it's going to have to be some type of a state crypto. And the reason I say that is because they're going to have to be able to will power against whoever else might want to take over or dominate. So I do think there's going to have to be armies behind it. I don't think it can just be some guy in a basement who creates a crypto and then the world takes over. I mean, it takes over the world. I don't think so. I don't think it's gonna end up that way. Okay. Let's see. Dan Himmer, have you heard of load token? Yeah, I heard of load tokens. I know David Morgan. He's a proponent of load tokens, silverbacked. Um, I think those. I think those are okay. I think load tokens are fine. I mean, I do need to look into it a bit more, but load tokens they're definitely on my radar as far as having some type of precious metals backed crypto. Okay, and speaking of precious metals, more importantly, silver. You guys out there, do you know what Silver Thursday is? Have you ever heard of Silver Thursday? And the reason I brought this up is because for a lot of you, we're coming off of Thanksgiving Thursday, and so I wanted to bring out Silver Thursday. Okay, so anyway, Silver Thursday has to do with the Hunt brothers. Okay, Silver Thursday was an event that occurred in the U.S. silver commodity markets on Thursday, March 27, following the attempt by brothers Nelson Bunker Hunt and William Herbert Hunt and Lamar Hunt to corner the silver market. A subsequent steep fall in silver prices led to panic on commodity and futures exchanges. And the Hunt brothers, they a little bit more before I move on. Nelson Bunker Hunt, Lamar Hunt, and William Herbert Hunt, the sons of Texas oil billionaire Haroldson Lafayette Hunt Jr., had for some time been attempting to corner the silver market in '79. The price of silver based on the London Fix jumped from $6.08 per troy ounce in January '79 to 49.45 in January of '80. One quick year, which represents an increase of 713%. I know a lot of us were looking for that. But that was a little bit of the story behind the Hunt brothers, where it's always been told that they were out to corner the market and things like that. But in actuality, there were a few other things going on with the Hunt brothers. As our last guest, Nick John Bruno, he had a few things to say about the Hunt brothers. For the benefit of our viewers who are not familiar with the Hunt brothers, can you share with us what happened with the Hunt brothers and their silver trade?
Sure. Well, the Hunt brothers are vilified even to this day by the media, and lots of other people because well, what they did is first you have to understand the silver market is tiny. It's about 1/10 the size of the gold market. It is a tiny, tiny market within not a very big market, which is commodities and precious metals. So it's a small sliver of that already niche market. And what happened was that back in the 70s and the 80s, the Hunt brothers were concerned about inflation. And it's a legitimate concern. The government back then, as it is now, is printing loads of money, financing ballooning deficits by printing money. There is all sorts of crazy stuff going on geopolitically around the world. Back then in the 70s, you had wars in the Middle East. You had the Iranian Revolution that kicked out the U.S.-backed Shah. And of course, Iran is a big oil producer. You have the same kind of setup today. But anyways, what happened is the Hunt brothers looked around and they saw this macro environment and thought, wow, we should buy some precious metal. And then when they decided, actually, they started buying precious metals, I believe, back in the early 70s. So this was a process that went on for a number of years. But back in the early 70s, you have to remember it was illegal for people to invest in gold back at that time. So the U.S. government prohibited it. It's completely absurd and totalitarian if when you think about it. So the Hunt brothers saw this environment, this macro environment that they were worried about inflation, they were worried about currency debasement, they were worried about what's going on geopolitically, and they were prohibited from buying gold because the government prohibited it at the time. So they did the next best thing and they bought silver.
Okay, so Hunt brothers, they had their concerns about inflation, and I just converted a few paragraphs from this article about the Hunt brothers from Investopedia into a PDF form so we could go through it. So the billionaire brothers, when oil tycoon H.L. Hunt died in 74, he left his sprawling family billions. Two of his sons, Herbert and Nelson, took their oil money inheritance into the commodities market, investing in a way their father had never imagined. The Hunt brothers believed that inflation would result in silver becoming a haven, just like its more expensive cousin gold. Nelson Bunker Hunt, in particular, believed there would be inflationary pressures that would destroy the value of any investments denominated in or tied to paper currency. So the Hunt brothers' claim was that basically inflation. And when we go to this from Trading Economics U.S. inflation rate, and what I'll do is I'll set the calendar here. Bear with me for a bit. I'll just go to 1965. Hang on, let me just get this square, and then I'll just go to, let's just say, 1985. Give it a 20-year time frame. Okay, so let's take a look at that. So this is the time frame from 65 to 85. And so the Hunts were saying, hey, inflation, it's going to start to eat away at the dollar. So we need to move into something else. So they went into silver. And they were telling the truth, because if you look at that inflation rate, 72, we're a little bit before 73 or so, it started going up and it went up to 12%, came down and shot up again right around 1980 to a little bit over 14%. So what the Hunt brothers were saying was absolutely true. They were getting into silver because they needed a way to hedge against that inflation. And that's what you and I are doing today. Because when we look at other things like the Consumer Price Index, and this is from the St. Louis Federal Reserve, we can see that we'll go to our infamous date here of 71 when the gold window was closed and fiat or money was broken. Basically, no more gold backing our money. Before that, it was just a nice gradual slope, not much change, pretty stable, gold back. Take away the gold backing right around here, And ever since then, it's been a much, 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 much more steep, gradual incline. Things are getting more expensive, and this is not counting food and not counting energy. Okay, less food and energy. Things are getting a whole lot more expensive. And the thing is, if I can come over a bit, let's just have an estimate. If it were still gold back, and we try and figure out about where this line would be if we just try to get an estimate, maybe where it would be today, we'd be somewhere around 80. Okay, so coming back, we'd be at about 80. Okay, and we're at over to 40 today, so basically triple. Now remember this word triple 3 times. Okay, remember 3 times, and I'll get into that later. So going back to the Hunt Brothers story, uh, Bunker foresaw at least a tenfold increase in the price of silver as a result of the plummeting real value of the dollar. So he and his brother began to buy up physical silver as well as future contracts. Instead of closing out contracts with cash settlements, the common procedure on the commodities market, the Hunts took delivery on silver. Then they stockpiled the silver and the rise of silver to more than stockpiled the silver and used their large cash reserves to buy up even more futures. The billions in demand triggered the rise of silver to more than $50 per ounce. The Silver Bug siblings continued to take delivery and borrowed heavily to take out more futures on silver once their immediate cash was all tied up. So again, let's go back to what Nick Gianbruno had to say about that.
And they started to accumulate silver, a lot of silver. And because the silver market is tiny, and the U.S. government did not prohibit buying silver in the same way it prohibited buying gold. So they started to buy silver and accumulate in a big position. A few years later, the U.S. government did legalize gold ownership again. But by then, the Hunt brothers had built up a considerable position in silver, and this continued throughout the 70s and the early 80s. And they took physical delivery, unlike most people in the market.
Yeah.
Trading these paper contracts and these derivatives of silver. They took physical delivery of silver.
They took physical delivery of silver, and moving on with the article, 1 billion worth of silver purchases was bound to move the market, and it did, but the Hunts were able to amplify this jump by leveraging the family fortunes many times over. The Hunt name was considered as good as gold where lending was concerned, and the Hunts were able to get capital at much lower rates than other speculators. Doesn't that sound like the banks? Anyway, moving on. They also preached their gospel of silver as the true haven in the upcoming inflationary flood to wealthy investors throughout the world and pooled converts funds to buy up more silver in futures contracts. Some of the speculators helping the Hunts included Saudi investors, a fact that would become important when the U.S. started paying attention. The Hunt brothers had already considerably reduced the amount of silver available on the market and made their continuing buying action all the more powerful by pushing up the price of silver. In any commodity deals, there are longs and shorts, but in this case, the shorts were vastly outmatched. A short squeeze formed as the brothers continued to buy up available silver stocks and take delivery on their future contracts. The Hunt's position was now worth around 4.5 billion. People were pawning coins and silverware to take advantage of the high price of silver, but there was less than a third of the silver market left that the Hunts did not control via futures. So moving on, of course, Uncle Sam is going to have to step in, right? U.S. government became concerned over what it saw as a clear attempt at manipulating the nation's silver reserves, and the fact that this corner involved the Middle East added some venom to the government's reaction. After all, the 70s oil crisis was still fresh in the nation's mind. Federal commodities regulators introduced special rules to prevent any more long position contracts from being written or sold for silver futures. This stopped the Hunts from increasing their positions by temporarily suspending the fundamental rules of the commodities market, with longs frozen and shorts free to pile in. Don't we see that today? Shorts always piling in. The price of silver began to slide. That's what we also see. Margin calls on the loans began to take a toll on the Hunt's reserves to the point where they were paying millions a day in calls, storage fees, and interest. The Hunt name, however, kept them afloat with easy terms on more short term capital. The Federal Reserve then took an unusual step. It strongly encouraged banks to stop making loans for speculative activity. Hmm, where have we gone wrong? Anyway, when it became clear that the government was after the Hunt scalps, their credit dried up. Concerns that the Hunts might not be able to meet margins with new loans and would go under, pulling several brokerages and banks with them. Geez, we had too big to fail back then, didn't we? Put further downward pressure on the price of silver. On March 27, 1980, the Hunt brothers finally missed a margin call and the market plunged. Silver led the way, dropping to under $11 from its high of 48.70. The aftermath, to wrap it up, government officials considered a bailout to prevent systemic chaos. Their action was vetoed because the government agencies didn't want to be seen as underwriting dangerous financial speculation. In the end, the Hunt name held true, and the brothers arranged a private bailout from a consortium of banks and companies. The Hunts were dragged in front of Congress, scolded, charged with manipulation, fined, fined again, and forced into bankruptcy. It nearly took a decade for them to unwind all their silver holdings and satisfy creditors, and the final bill left them billions poorer, although still wealthy by most standards. What an amazing story, right? I mean, government gets involved, Federal Reserve gets involved, but it's the Hunt brothers story still continues today. It's just that the players have changed, but the story's the same, and we'll get into that also in a little bit. Just want to go through some more of your comments here. Let's see. Ron Stable, I can't get enough silver. Same. I'm the same. Let's see. Smart move, Austin Bird. I have 15 kg bars, but I also have 1 ounce, 10 ounce, etc. All good for the land purchases coming up. You know, that is a good move. I mean, it's good to have the bigger bars. It's good to have, a little bit of smaller size things as well, because you just do not know what you're going to need it for. And, it's not just the case of trade or bartering where you're going to use some grams of silver to buy some food and things. It's much, much, much more than that. We're talking about wealth preservation. We're talking about the money that you have today being able to transition through into whatever new currency that the world is going to bring upon us, because the things like gold and silver is going to be able to transfer the money that you have today, or that paper fiat that you have today. I mean, if you have a $20 bill, let's say if you have a $20 bill, a piece of paper, right? If anything happens with this piece of paper, it's okay, because now you have it in something else, So if this goes poof, you still got this, and this actually holds the value of this. So when that new currency system comes in, if you're out of this, you probably will be okay. If you're into things like silver and gold, you probably will be okay. Not financial advice, professional or otherwise. So again, disclaimer: these are just my comments. Okay, so no financial advice here. Okay, so let's take a look at a few more of the questions. Ride the curve. In the U.S., the year the government stopped using silver in quarters and dimes, they never gave a heads up to its citizenry. Ride the curve, and that's how it's going to work. You see, the governments, the banks, they can't let you know ahead of time. If they let you know ahead of time, you're going to react. And if too many people react, the outcome that they want is not going to be at the level that they want. So they're never going to tell us ahead of time. And all you need to do is go back to 2007, 2008, the great financial crisis. We weren't going to be told anything. It was only the reason why they told us, and they even said it. We were 2 or 3 days away from global financial meltdown, whatever it was. So in other words, they told us because they kind of fixed it. If they didn't fix us, you think they're going to tell us? We came that close, 2 to 3 days. You think they're going to tell us? They were never going to tell us. And it's the same with when it comes to bail-ins. Your money in deposit in the banks. You think they're going to tell us if they ever need it for bail-ins? They're not going to tell you. If you kind of get wind of it, that there's some board meeting. Okay, should we discuss bail-ins and whatnot? Somebody on that board is going to go home, tell his wife. That wife is going to tell her friends, or he's going to tell his friends, hey, pull your money out of the bank. Enough people do that, pull their money out of the bank. There goes the desired effect that they want. So things like bail-ins, it's going to happen quick. It's going to happen very, very, very quick. We're never going to be told. These things are just going to happen. And so, Nick John Bruno, he also said something interesting where, he didn't see the Hunt brothers as villains. He saw someone else as being the villain.
So the Hunt brothers, that's all they did. People portray them, the media portrays them, historians portray them as like these criminals that were manipulating the markets and ripping people off. It's totally not the case. They were speculators. They saw a situation where the government was debasing the currency, and they took action to profit from that. So they're not the villains in the story. The villains in the story is the government who is destroying the currency. It's not the person who sees what's going on and takes advantage of it.
Okay, hang on there. So basically, I think the question, is were the Hunts really villains in this case? And then let me go back to that article that was just up there. Sorry about that. This was out in 1988. Okay, August 21st, 1988, Los Angeles Times. It's a pretty old article, but it was fairly recent at the time, the Hunt brothers, so it was more of a closer look, closer take than where we are today. The flamboyant Hunt brothers of Texas, whose combined riches once totaled an estimated $6 billion, were found guilty in federal court Saturday of attempting to illegally corner the silver market 8 years ago, a move that marked the beginning of a downward financial spiral that has eroded much of their vast fortune. Three brothers, Nelson, William, and Lamar, were ordered by a New York jury to pay more than $130 million in damages to Peruvian government's mineral marketing company, which contended in its civil suit that it was ruined by the brothers' investments. The company, Minpeco S.A., alleged in the suit that the Hunts broke antitrust and racketeering laws by scheming to corner the silver market and then trying to do so by buying a third of the world's silver supply in 1980. Jurors in the trial, which began, this is again back in the 80s, February, found the three brothers guilty of violating fraud, commodities, and antitrust laws. In addition, Nelson, 62, and William, 59, were found guilty of racketeering charges, but the civil case verdict carries no criminal penalties. Only Lamar, the owner of the Kansas City Chiefs football team, you might remember that name, Lamar Hunt, was found not guilty of racketeering. The jury also found that International Metals Investment Corporation or Company and Mahmoud Fustok, a prominent racehorse owner, had participated in the conspiracy. The Metals Investment Company was owned by two Arab sheiks and two of the Hunt brothers. Fustok is the brother-in-law of the Saudi Arabian crown prince. Another defendant was a Lebanese businessman now living in Brazil. The sheiks and Lebanese businessman Naji Nahas have no U.S. holdings and did not challenge Minpeco's court papers. I mean, I'll stop there, but basically, what do you guys think? Were the Hunt brothers sort of heroes in some way, or were they really villains? My take on it, I don't really I'm not gonna say I don't see what they did wrong, but I think it was just a time where they had association with people in the Middle East, and that was a time where the U.S. government had issues with the Middle East. So I think it was probably influenced by politics in that type of a way. But I don't see anything wrong with the Hunt brothers buying silver because they're looking at inflation. They're looking at governments printing wildly. That's what we do today, right? We're doing the same thing. So naturally, I don't see anything wrong with that part of it. But I'm curious to know what you guys think. Um, so let's see. Uh, Let me go down a bit. They weren't bankrupted or called criminals. Let's see. Tim McKay. Could the U.S. government repeat the 1933 forced sale of all gold bullion to it at a dictated value? Sure. Sure. Why not? Government absolutely can do it. In fact, another interesting one for you guys over in Australia. You guys have that Banking Act of 1959, which is kind of sort of suspended, where if they want, they can go ahead and I believe, take your gold. This is in the Banking Act of 1959, Section 4. You guys can look it up over in Australia. So if you're down in Australia, get familiar with the Banking Act of 1959, Section 4, because this act is only suspended. It just needs one signature, suspension lifted, and that act comes back into play, and it definitely is going to have an impact on your gold. So if you guys are over in Australia, anybody out there hearing this, get familiar with the Banking Act of 1959, Section 4. Okay, let's see. Hello, silver lovers, Bob the Monk. Hello, Bob the Monk. How you doing? Let's see. Elbow Sanchez. Hey, if you have the money to buy, then buy. That is true. If you have the money to buy, go ahead and buy. Uh, I want to say don't overdo it, but I have a problem of overdoing it. I mean, I often buy more than I should have, but it's I intend to be my own bank, and I'm sure all of you folks intend to be your own bank. So you want to buy that gold and silver when you can, So there's nothing wrong with that. Uh, okay, so anyway, so the Hunts, were they heroes, villains? Hard to say. It just depends which side of the fence you on. But there was another guy that came after the Hunts that basically did the same thing, which I'm going to let William Silber explain. William Silber is a professor at the New York University. I think he's a professor in economics. We did an interview a while back, but this is what Professor Silber had to say. Silber, Silber. This is what he had to say about after the Hunt brothers. There was another guy that came in.
Well, in the process of doing my work, I found people who were involved in silver that I would never anticipate. And one of the big surprises was Warren Buffett.
Mm,
Uh, Warren Buffett actually had been looking at silver before Nelson Bunker Hunt.
yeah.
He started looking at silver in the 1960s when the United States was still making dimes and quarters out of pure silver.
Yes.
But silver and gold did not fit his investment strategy. Buffett liked to invest in companies that he understood, and he did not like precious metals that, especially gold, which he said, and I quote, would remain lifeless forever. But silver was different because silver not only was a precious metal, it also had industrial uses, specifically in electronics and medicine. So Buffett kept on looking at it, kept on looking at it, and then he pounced.
Okay. Warren Buffett pounces on silver ounces. In fact, it was millions of silver ounces. But why? If he was looking at silver before the Hunt brothers, surely he saw what happened to them, right? So it's kind of curious. Why would Warren Buffett want to go into silver after seeing what happened uh, with the Hunt brothers? So again, the question is why did he do it, right?
In 1997, silver had collapsed in value from a peak of $50 in 1980. It fell to $5 an ounce in 1997. And Buffett thought it was cheap, too cheap. Too cheap because it had industrial uses that exceeded production. So he said, I'm going to buy this metal and hold it as an investment, which he did. He bought 100 million ounces, almost as much as the Hunts,
Yes.
in a short period of time. In 1997, he bought it and he held on and he held on for 8 years. And he sold it in 2005 when silver went to $7.50 an ounce. And he made about $250 million. Not bad, right? For anyone but Warren Buffett.
No.
$250 million on a $500 million investment over 8 years is not so good. It's about 5%. He sold it too soon. He became uncharacteristically impatient.
I see. What was interesting in that interview with the professor is he used the word uncharacteristically impatient a couple times, and gotta admit it brought up some thoughts of was he being forced to sell, similar to the way the Hunt brothers were forced to sell, but we I don't think we'll ever know the story. But why did Warren Buffett let go of his silver? Was it legit time to sell, or was there something else going on? As I was just saying, we saw what happened with the Hunt brothers. um, they basically were ganged up on. The U.S. government, Federal Reserve, the banks, all of them ganged up on the Hunt brothers. And then here comes Warren Buffett. Why would he do that? Seeing the full on effect of what happens if you try to so-called corner a market, if that's what you're doing. But he felt silver was cheap at the time, so he went into it. But then he uncharacteristically sold too early. So that was a question you kind of had to wonder why did he go ahead and do that. So you kind of wonder what's the difference between what the Hunts did and what Warren Buffett did. This is the part that I think may puzzle a lot of people, including myself. We had the Hunt brothers, 200 million ounces of silver. We had Warren Buffett, 100 million ounces of silver. But were the two treated differently in some ways? Where the Hunt brothers, we know what happened with them, but Warren Buffett, nothing really happened to him, right?
Well, nothing really happened because he, in fact, disclosed what he was doing and didn't do it with anyone else. And one of the reasons the Hunts got into trouble was because they violated the Sherman antitrust laws by combining with other people. Buffett did it himself, and he said, just thought it was a good buy. And he did hold on for 8 years. And we didn't get back to why he sold too soon. He sold in 2005. Had he waited another couple of years, when the Great Recession started, silver spiked, as we know, from $7.50 an ounce to over $40 an ounce by 2011. And had Buffett held on, his $500 million investment would have been $4 billion return, not a $250 million return. He would have made more than 15% on his investment. He became uncharacteristically impatient. He should have waited and used silver as insurance against a catastrophe like the potential from the Great Recession.
He should have hung on to his silver and used his silver as an insurance. That's something all of us know, right? We all understand that, and so it's pretty interesting when you look at the tale of these two people, whether it's the Hunt brothers and whether it's Warren Buffett. You know, like I said, you gotta wonder why did he move out of his silver uncharacteristically, as Professor Silver from the New York University had mentioned. Almost, I don't want to put words in the professor's mouth, but almost seemingly as if he wants you to understand the word uncharacteristically. He wants you to hear that word. But you know, so we look at the Hunt brothers, and following them was Warren Buffett, and there's someone else now who's following Warren Buffett. I'll give you guys one guess who it is. I'm sure you guys know who it is. So, but I may as well just go into it because you know who it is. It's J.P. Morgan. So first we had the Hunt brothers. Following them was Warren Buffett. Sorry, and now we have JP Morgan has cornered the silver market via manipulation. Wow, what a headline. This is from GSI Exchange. This article is going to be a bit biased, but hey, so are we, right? We're biased towards silver and gold, so it's okay. We understand. So let's see. Two words: unappreciated and scarcity. These words describe with great clarity what's happening in the silver market right now. Let me take a look at this article. It's August 25 of 2018, so it's just a little bit over a year old. So here we go. Silver has proven to be one of the fastest and most volatile markets. It has exhibited a historical tendency to rise higher and faster than most assets, and its dramatic plunges also exceed the depth and speed of most others. This is part of the reason why Nelson Bunker Hunt, the famous silver speculator, called silver an accident waiting to happen. Underappreciation is the precondition of surprise, and in this case of silver, and in the case of silver, extreme price volatility driven by panic buying or selling characterizes the underappreciated status of this often neglected yet highly valuable asset. But the second part of this phrase also concerns scarcity. The availability of physical silver is growing smaller and smaller as a significant amount of the metal is being allocated for industrial use. Most investors are aware of silver's dramatic price movements over the last decades, yet most investors are unaware of the major force behind those moves and how such a force may be a key indication that silver will soar beyond its current levels. The world's largest stockpile of privately owned silver, 500 million ounces, is owned by one of the world's largest banks, JP Morgan Chase. Hunt Brothers 200 million, Warren Buffett 100 million, JP Morgan 500 million. In just 5 years, JP Morgan Chase has accumulated the largest holdings of physical, this is physical, holding of physical silver in the world. In fact, prior to JP Morgan, there was only one other entity that owned more physical silver, the US government. And that was over a century ago when silver coinage was in common use. In 2008, the Treasury and the Federal Reserve asked JP Morgan to take over. Well, look at that. The government is asking JP Morgan to take over the falling investment bank, Bear Stearns. Remember that, right? Financial crisis. What many people don't know is that Bear Stearns held the largest short positions in COMEX, gold, and silver. Upon taking over Bear Stearns, JP Morgan inherited the role as the metal's largest short seller. According to CFTC data, JP Morgan maintained these positions while concentrating its efforts on the silver market. Before long, JP Morgan became a dominant force in silver, able to exert significant influence on silver pricing, aka manipulation. JP Morgan's resources were so large that they were able to sell nearly unlimited quantities of silver futures even as prices rose, and buying them back as they plunged. As a result, JP Morgan made a profit amounting to hundreds of millions immediately after the Bear Stearns takeover. The continuous silver market manipulation suppressed prices as low as $9 per ounce at a time when the physical supply was drying up, a factor that catapulted silver to the near highs of $50 per ounce. Caught with a dangerously large short position, JP Morgan sought assistance from the CME to offload some of these shorts, a cooperation that led to the rigging of one of the sharpest sell offs in history. During this harrowing process, it dawned upon JP Morgan that investable silver was fundamentally scarce and that the most profitable side to be on for the long term is the long side. And this is when JP Morgan began to hold silver. Took them 500 million ounces, 5 years to accumulate 500 million ounces without driving up prices. Um, so let's just see. JP Morgan's impressive feat was to inconspicuously corner the physical silver market while artificially managing a decline in the COMEX paper market by cleverly manipulating markets with short futures positions. While acquiring newly produced silver, JP Morgan was able to quietly build its 500 million ounce stockpile. JP Morgan has strategically positioned itself to profit from silver's fundamental scarcity. Now, all it has to do is absolutely nothing. Stroke of genius or the perfect crime, we can at least give them credit for identifying and seizing the opportunity to buy silver. Amazing, right? So here we have Hunt Brothers, government, Federal Reserve, banks jump all over them. Warren Buffett uncharacteristically sells. And then JP Morgan, who seems like the government helped out. I mean, CME is helping out and they're able to now truly corner the silver market. So isn't this just amazing, right? I mean, either you're in the club or you're not. That's basically what it comes down to. Checking the comments, bankers are crooks. Yeah, yeah. Let's see. That's a good one. That's a good one, Elbow Sanchez. Let's see. Max Kaiser buys silver, crashed the Fed. It's true. RR. Oh, isn't that sweet for JP Morgan? Yeah, a lot of things are sweet for JP Morgan and really not for anyone else. So, really, is anything going to happen to JP Morgan for their silver hoarding? I mean, again, saw what happened to the Hunts. Warren Buffett was quietly persuaded to uncharacteristically sell. What about JP Morgan? They're truly cornering the silver market, even, looks like even manipulating the market according to this article. Allegedly, this is what they're doing according to the author of this article. So, is anything going to happen to JP Morgan for their silver hoarding? Well, what do you guys think? And in the meantime, I guess the question is, what do we do? Should market manipulation discourage us from buying precious metals, or knowing what banks and governments are doing, should we go full steam ahead and continue to buy up precious metals? My answer is an easy one. I'm continuing to buy. You know what governments are doing. You know what banks are doing. You know what's headed down the road. I mean, buy. Just keep buying it, with an understanding that you know it's an insurance, as Professor Silber said. It's an insurance, and we all know that it's also an insurance. So it's an insurance that has investment qualities, and it's something that can definitely help us out. Buy. Don't be afraid to go ahead and continue on. Again, not financial advice. Disclaimer. Anyway, Elbow Sanchez, it won't be sweet for them with this thing when this thing yeah. Couple underlings got thrown under the bus. That's all. That is true. RR. A couple guys, they took the hit, got thrown under the bus. But what really happens to J.P. Morgan? Nothing really. Glenn Cooper, Silver Thursday. Absolutely, that's what this topic is. We just a lot of people are coming off Thanksgiving Thursday, so we decided to go ahead and do a Silver Thursday. Let's see. Elbow Sanchez, people losing pensions will be out for blood. Absolutely. We know what's going to happen with these pensions already. They're going to be underfunded. You're not going to be able to get your lump sum, and your monthly payout that you're expecting is going to be less. These are already talked about, and we're going to I think unfortunately we're going to see these things happen a little bit more down the road. Um, so the thing is, we're seeing all these things, but we're also seeing it today, and this is another thing that Nick John Bruno brought up.
So nonetheless, because of what they did, they bought a lot of silver, and that caused a spike in silver prices. Not just them. There was a panic into silver because of inflation. There was a panic into precious metals in general, but because the silver market is so tiny, when there was all this inflation going on in the late 70s and early 80s, people panicked into precious metals, and a lot of that money found its way into silver. And that caused the price of silver to spike. So that's what I'm talking about with the Hunt brothers and the situation. So why it's relevant today is because I see a similar setup to the setup that happened back in the late 70s and early 80s. I see a similar setup happening right now in silver. So that's why I told that story. First of all, to set the record straight, because the Hunt brothers, everybody thinks of them as villains, but really it's the U.S. government people should think of as villains. So I told that story to, one, kind of set the record straight, and two, illustrate that there is a similar setup happening right now.
Okay, similar setup happening right now. So if we could go back in time, though, really quick, silver hit $50 back in 1980, right about $50 in 1980. We're at about $17 right now. So if we use this inflation calendar, and let's go ahead and put $50, which was the price of silver in about 1980. What's it worth in 2019? Or how many? Let me rephrase it. If you had, let me get this number first. Okay, $155.20. Okay, that is what you would need in 1980 to buy the same amount of things today. You would, or actually, I might have it backwards. Essentially, that $50 with inflation is, you would need $155.20 to buy the same amount of goods and services as you could have back in 1980. So we can see this is about 3 times. Remember, I said, remember this number 3, number 3 for 3 times. If we do it in the reverse, where we see silver at 19 or $17 in 1980. So if we had the same silver price today back in 1980, and we come forward to 2019, we're at $52.77. So there's your $50 silver. So can it get back to 50? Absolutely. It can definitely get back there. So what I'm really saying is, don't get too concerned about the up and down movements. What it is really is the purchasing power, and over the years you're going to retain that purchasing power. That's what silver is gonna do for you. I want to do one more thing, and I hope I can get this thing to work. Let me plug something in real quick, and I'll see if I can get this to work for you guys. Hang on. Okay. Let me just hit one more button. Okay, here we go. So what I have here, and you guys mentioned it. Some of you guys talked about, the Mercury dimes. So here we have one. I think this is a 1937. And some of you guys talked about junk silver. So I have that as well. Okay, hang on. So Well, what I wanted to show you guys is when you take this is a half dollar, okay? Half dollar, and it's a Kennedy 1964. Okay, so hang on here. Uh, Let me just close a few windows so this doesn't lag too much. Okay, so this is a Kennedy 64. Okay, so we know it's 90% silver. Okay, so when we weigh this guy out, we see it's 12.29 grams. All right, and again, as I mentioned, it's 90% silver. So that 12.27 grams times 0.90%, we come out with basically 11 grams of pure silver. Now remember that number 3 I asked you to remember, right? So if you times this by 3, now you have just slightly a little bit more than an ounce. Okay, so you have an ounce of silver at basically this would be about an ounce of silver. Sorry about that. And we know that the value of this is 50 cents. It's a half dollar. So 3 of these equals about an ounce, which an ounce is right about $17 an hour. And we have the country basically saying we need at least $15 an hour to be a livable wage or minimum wage. So the point here I'm trying to make is, had they kept the silver in the coins, $1.50, or 3 of these guys, which are 90% silver, 3 of these guys, which total out 37.2 or 37.17 gram, 37.17 times 0.90, because they're 90% silver, right? So 3 of these, as I said, is a little bit over an ounce, which puts it at a little bit over $17 per ounce, which is more than what people want for minimum wage at $15 an hour. And again, these are all half dollar coins. These are all 50 cents. 50-cent coins. Okay, so 3 of them is $1.50. $1.50 of 90% silver coins gives you more than that $15 an hour minimum wage that guys are trying to get. So that kind of goes to show you how silver fights off inflation. It goes to show you how it's a store of value. Might not be the best demonstration, but I hope you guys kind of get the point. Um, I'll go through a few more comments, and then I'm gonna have to be heading out. I'll read one paragraph for you guys in William Silber's book before I head out, though. Uh, Pablo, don't be jealous. Zero head, zero heads. How you doing? Uh, yeah, I know, just teasing. Okay, silver coins weight stays constant on the scale. I wish mine did. Yeah, I mean, it's not a perfect scale, but it's good enough just for a demonstration. Logic is wrong. Well, if it's mine, sure. Let me know. I mean, I'm open to it. So let's see. Ride the curve, multiply by $1.40, i.e. $1.40 face value over 90%. Sure, could do it that way. You could do it that way as well. I guess. But again, the point is, had that silver stayed in the coins, that 90% silver coins, we'd be in a much better place. But let me read one paragraph for you guys. Hang on now. Again, this is from William Silver, this book that he has, the story of silver. It's not that long a paragraph, but he goes on to say that will precious metals ever return to their monetary status? Not if central bankers do the right job, but public support can evaporate, undermining their resolve. The U.S. Congress, for example, can abolish the Federal Reserve with a simple majority vote, suggesting that America's central bank might run a printing press when rising interest rates bring an avalanche of protests to Capitol Hill. The Federal Reserve has survived the 50-year-old trial of the fiat currency, but that period is less than a heartbeat in world history. The Soviet Union's experiment with communism challenged America for world domination for the better part of the 20th century before expiring like the worthless paper currency of the Weimar Republic. Central bankers remain on trial, and the uncertain verdict sustains the ancient role of gold and silver as storehouses of value in the new millennium. So that's even what Professor Silver is saying. Silver and gold, they're storehouses. And again, this is why we say they store your wealth. So it's a good idea to really have some silver and gold to get you through whatever's coming ahead. Okay, so let's see. Zero hedge. Anyone can understand that explanation? I hope so. I'm not sure where the context of it, but I hope so. RR, that was a good demonstration of the purchasing power being present. Okay, thank you. Anyone think that platinum and palladium weren't used as money back in the day because they weren't discovered and mined, but now we could have a four metal monetary standard? You could. It just it really depends. I know, like the U.S. Mint, when they came out with these platinum and palladium coins, according to them, they find the response not as well, of course, as silver and gold, and that's again because we know silver and gold to be money or have a history as being money. We don't know platinum and palladium as having history of money. So I think platinum, palladium kind of go more on the speculative side, uh, precious metal side more than the monetary side. And I think it's a fair statement to say that because we don't have a history of platinum, palladium being money. But the mint has taken time to put a legal tender value on it, so you just never know, right? You have a good point there. Let's see. People, if they knew, could bankrupt the central banks via holding transacting with metals. Yeah, there was a movement before, trying to hurt, I believe, J.P. Morgan in some ways, where everyone should just go up and buy 1, 5, 10 ounces of silver. If everyone did that, it would start to affect their so-called manipulation on the market. Okay, let's see. Silver is gold on steroids. We're going to see that. I think we're going to see that. Um, let's see. Everyone else has only audio. Did the video disappear? Okay. Well, maybe I'm running into some technical difficulties now. It's been about a little bit over an hour and a half, so it's probably time to be heading out anyway. But again, I hope your Thanksgiving weekend went well. I hope we learned a little bit about the Hunt brothers, because I think essentially we're kind of sort of all doing the same thing, but we aren't doing what central banks or JP Morgan is doing, right? But it's just that we see the inflation on the way, we see that the money printing is happening, and so we are trying to protect ourselves as best we can. Um okay, all good here. Everything is crystal. Okay, cool. But again, I hope you guys, just take the time to again study up on silver, gold, not just the price. We say this all the time. Don't just look at the price, because it's much, much, much more than the price. And I do appreciate you guys being here once again. I do hope you folks have a good work week ahead. If you can, go back and watch the interview with William Silver. It's a pretty interesting guy. Again, he's I believe, economics professor at the New York University. And believe it or not, when he first started, I believe he said his first class, as when he was an economics professor, he had, believe it or not, Alan Greenspan as one of his students. So I remember him saying, it's pretty nerve wracking that he's over there teaching a class where Alan Greenspan is sitting at one of his desks. So yeah, I could imagine, pretty nerve wracking. But yeah, again, I thank you guys all for being here. Stay informed, make the right decisions, be a blessing, not a burden. We're all in the same boat together. do take a look at the investor kit. Again, it's free. You don't even need to sign up for an account. It's there for you to go ahead and take a look at some things. And as we always say, saddle up for what's coming ahead and silver up. We'll see you again next week, and you guys take care. Take care of each other. See you later.